Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance with a critical eye and a dash of skepticism. I'm your host, Lewis, and I'm delighted to have you join me today as we explore the latest developments in the crypto space. Now, let's get straight to it. We've got some exciting news from India, where Coinbase has announced an investment in CoinDCX, one of the leading crypto exchanges in the region. According to reports, this new funding will take CoinDCX's valuation to a whopping $245 billion post-money. That's right, folks, $245 billion. It seems like the cryptocurrency market is still attracting big bucks, despite the volatility and regulatory uncertainty that's been plaguing it of late. Now, I know some of you might be thinking, Lewis, isn't this just another example of crypto madness? And to that, I say, maybe. But let's take a closer look at the details. Coinbase, as we all know, is one of the most reputable players in the global cryptocurrency market. They've been investing in CoinDCX since 2020, and their decision to infuse more capital into the company suggests they believe in its long-term potential. As Sean Agarwal, Chief Business Officer at Coinbase, put it, India and the Middle East are among the most dynamic regions for crypto adoption and innovation. We're excited to support CoinDCX's continued growth and look forward to expanding our partnership in the months ahead. That sounds like a vote of confidence to me. Of course, there are also those who might be worried about the regulatory implications of this deal. As we all know, the cryptocurrency market is still largely unregulated, and governments around the world are grappling with how to handle it. But CoinDCX seems to be taking steps in the right direction, having become the first exchange to be FIU registered and ISO 2701-2022 certified. Now, I'm not here to take a stance or promote any particular investment strategy. My goal is simply to provide you with the facts and some context so you can make your own informed decisions. And speaking of facts, it's worth noting that CoinDCX has a talent base of over 400 employees and is backed by some of the world's leading investors, including Polychain, Bain Capital, and Pantera. So, what does this deal mean for the broader cryptocurrency market? Well, it's hard to say for sure, but one thing is certain. The space is still attracting significant investment and attention from major players. Whether that translates into long-term success remains to be seen. And that's all for now, folks. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Stay tuned. Welcome back to the Riskwiser Zone. We're glad you're joining us again after that brief break. As we dive into the world of finance and cryptocurrency, it's clear that the landscape is ever-changing. Today we're witnessing a fascinating phenomenon, the intersection of traditional banking and crypto assets. You may have heard the news about Citi looking to launch crypto-related products and services, including custody accounts. This move signals a significant shift in the way mainstream finance views digital assets. With the recent announcement of an investment in BVNK, a global infrastructure platform for stablecoins, it's evident that Citi is serious about tapping into this burgeoning market. But what exactly does this mean for investors? Stablecoins, as you may know, are digital assets pegged to another asset, such as the US dollar or a commodity, which helps maintain a relatively stable value. This could potentially make them more appealing to institutional investors and individuals alike. Meanwhile, in the world of crypto stocks, we're seeing some interesting developments. Peter Thiel-backed companies, Bullish and Bitmine Immersion, have seen their shares surge after the recent market crash. While it's essential to remember that the crypto market can be highly volatile, this bounce-back could indicate a degree of resilience. Now, let's take a step back and assess the situation. The crypto market did take a hit over the weekend, with over $19 billion wiped out from the total market cap. However, Treasury Secretary Scott Bessent has reassured that the relationship between the U.S. and China is good, which might help alleviate some of the trade tension concerns. As we navigate this complex and rapidly evolving space, it's crucial to remain informed and cautious. While some may see opportunities for growth, Others may be more risk-averse. As always, it's essential to do your own research and consider your own financial goals before making any investment decisions. In conclusion, the world of cryptocurrency and traditional finance is becoming increasingly intertwined. As we move forward, it will be fascinating to watch how these developments unfold. Will Citi's foray into crypto custody accounts pave the way for more mainstream adoption? Only time will tell. Stay tuned for our final story of the day, right here on the Riskwiser Zone. We'll be exploring more insights and analysis from the world of finance and beyond. Welcome back to the Riskwiser Zone. Today, we've been exploring the complex world of global markets and economies. As we close out this episode, let's take a look at some of the latest developments in the oil market. We've got a fascinating story coming out of the energy sector, where oil prices have steadied after falling to a 5-month low due to expectations of a supply glut and escalating U.S.-China trade tensions. According to reports, Brent crude traded near $62 a barrel, while West Texas Intermediate was below $59. The International Energy Agency has predicted that the global oil market will be oversupplied by almost 4 million barrels a day next year, which is an increase of nearly a fifth from its previous forecast. Now, this news may have significant implications for investors and traders, particularly those with interests in the energy sector. The anticipated glut in oil supply could lead to depressed prices, which in turn could impact the profitability of oil-producing companies. On the other hand, consumers may benefit from lower fuel costs, which could boost economic activity. It's also worth noting that U.S.-China trade tensions are continuing to simmer, with President Trump threatening to stop trade in cooking oil with China. While there have been some conciliatory tones from U.S. Trade Representative Jamieson Greer predicting that tensions with China would ease, the situation remains uncertain and could potentially impact global markets. As we navigate these complex market dynamics, it's essential to remain informed and adapt to changing circumstances. At Riskwiser Zone, we're committed to providing you with unbiased and balanced analysis to help you make informed investment decisions. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, invest with caution.